All right. Welcome, everybody, to the VALR Podcast. It's great to be with you here and great to have a really special guest here, Arthur Hayes. I'll come to our history in a second. But on the VALR Podcast, what we're trying to do is really to get voices to come and share insights with the VALR community and beyond. And then also to shape the discourse of the crypto industry, where we are, where we're going. There's a lot of misinformation out there. So we're going to try to get a whole host of different perspectives, voices, so that we can really hope to learn and progress. So on that note, Arthur, very, very welcome.
Thanks for having me.
It's great to have you here. So I don't know if you remember, but do you remember where we first met actually?
Hong Kong? It's maybe inside Bitcoins, maybe? Shanghai. Wow.
Shanghai. That was 2016. And I think to take us back, if I remember correctly, that was at DevCon 2, the second Ethereum conference that there was. And I think BitMEX was like 7 people at the time. So we met for like some drinks and some eats together. And that was before BitMEX took off. And I remember you sending messages as well saying, guys, we're hitting like $1 billion in trading revenue. And that was kind of at the beginning of when BitMEX took off in a very, very big way. So congrats to everything you've done with BitMEX. I think not everybody knows that you and the BitMEX crew were kind of the pioneers of the Perpetual contracts, which accounts for like 75% of the trading volume in the crypto markets now. So again, really, really great pleasure to have you here.
Awesome.
To start off with, I want to kind of talk macro soon, but I want to start with a little bit of your story and just hear about where you came from. A lot of people know, but some people don't know. So a little bit about your TradFi background, where you've come from, where you were with BitMEX, and where you are right now.
Yeah, sure. So I went to a finance business focused undergraduate school called Wharton Business School in University of Pennsylvania in Philadelphia. I graduated in 2008. And at that point, I'd made the decision that I wanted to move to China. I actually took Mandarin for 2 years in university. Then I decided to party more. And then my writing characters for an hour every day went out the window and kind of atrophied at that level. Thankfully, I got a job in Hong Kong, which didn't require me to speak fluent Chinese. But in any event, I moved out to Hong Kong in 2008 with Deutsche Bank as a full-time graduate. And actually, my first day on the trading floor was the Monday morning after Lehman had filed bankruptcy in the fall of 2008. So it was quite a crazy time to be,
September 16th? Is that September 16th?
Something like that. Yeah. Yeah. We had finished our, training program where we learned fuck all because drank a lot in London. I'm over in Hong Kong and, you're sitting at the desk with a bunch of screens in front of you. You have no idea what the fuck you're doing. And, the head of trading is running around the floor talking about which banks are going to go under and who we can trade with, who we can't trade with. It was quite an interesting experience. So that's kind of how my baptism by fire into the TradFi ecosystem. I then spent the next 5 years between Deutsche Bank and Citibank on the exchange traded fund trading desk. So I ran the market making operations in Hong Kong and Singapore for all of the global ETFs that Deutsche listed and Citibank had as well. And then the best thing that ever happened to me in the spring of 2013, I got fired from Citibank, last one in, first one out. And I had some time on my hands and I knew that finance, as it was being done right then, wasn't really doing it for me. I didn't really see a path to make sort of insane amounts of money being, a mediocre ETF market maker for a TradFi bank. And I had come across Bitcoin on zero hedge because the price had pumped to like $250. Didn't really pay any attention to it at the time. And then I thought maybe I should just take a look at what this thing is. I read the white paper. I was instantly fascinated because, I was a pseudo gold bug at the time. I had my little box of gold coins that I stored at the bank and whatnot, and really, bought into the whole bullshit of central banking and money printing and all that. So it really, really resonated with me. And so I started to just find out as much as I could about Bitcoin. Where can you trade it? How can you trade it? I'm a derivatives trader. So going long, going short, options, futures. And I stumbled across this futures exchange called ICBit, run by these 2 Russian guys in the Caribbean anonymously. And I thought, wow, this is cool. You can trade a futures contract on the Bitcoin US dollar rate. And I know how to do this. I've been arbitraging futures versus cash for my entire TradFi career. And this is crazy that I can make 200 to 300% per annum returns by just shorting the future and holding Bitcoin. So I did that for a while, helped me pay my rent. And then after a certain time period, I thought, well, I like this crypto thing, but I think I need to do something a little bit more serious than, point click trading, because that's not really scalable. And over time, those returns will go away as I'm not that sophisticated of an electronic trader. So I came up with this idea. I wanted to build my own derivatives exchange. And I reached out to my network, and thankfully I found my two co-founders, Ben Dilo and Sam Reed. Sam helped with sort of the full stack web architecture. Ben helped with building the trading engine. And I pitched these guys. Sorry, you're on mute.
Sorry, did you know them from a previous life?
No,
Or
I literally was like, just reached out to friends. Hey, I'm doing this crypto thing. You know anyone who has these sort of technical skills? Oh, maybe we should speak to these two guys. And luckily, they were both in Hong Kong, friends of colleagues. I met up with them over drinks, and hey, I want to do this crypto exchange thing, but not a spot exchange. We want to just do derivatives, because I think that derivatives are going to be the next big thing, and they're going to evolve similar to how spot markets, how TradFi evolves, right? It's spot, then it's derivatives, then you get into sort of interest rate trading and blah, blah, blah. So there's no derivatives market, a very nascent one. This is our way to get into this space, have a defensible business model that we can charge for, because this is back in 2013. There's very, very little VC funding, especially not for a dude sitting in China when all the money is in San Francisco, right? They just don't think China exists over there. Right. So there's no money to, raise from traditional VCs. It's got to be bootstrapped. Whatever we have in our savings account, we have to build a business that actually has customers that pay us money immediately. Yeah. And I thought derivatives was that thing. And so we started building in 2014. Took us about 11 months to launch. And then sort of the rest is history. Invented the Perpetual swap in May of 2016. That was sort of the best thing that we've done as BitMEX, and sort of powered our, ascension to, at one point, the largest crypto trading platform in the world. And then the Perpetual swap has lived on and is, as you mentioned, the most traded product ever in crypto history. Every exchange has it. Everyone uses it. So that's kind of, the BitMEX journey. And, starting in 2022, I opened my own family office with a few individuals, and it's called Maelstrom. And basically we do shitcoin trading. We do term sheets. We do a little bit of liquid trading, some advisory. And so that's probably what you've seen me out there, shilling Athena and Pendle and some of our other projects that we have that we, advise on, that we've invested in. And so that's sort of my journey is into an investor side of things.
Got you. Awesome. So to go back to, two questions. Why did you move to Asia? Like, what was it about Asia that attracted you? And then the second question, I want to go into a little bit of the perpetual contract and how that came about, and kind of what the backstory is, or what the inspiration for that was. But first, why Asia?
So I remember sitting in my living room in 2004, I think it was, Buffalo, New York. For those of you who don't know, it's a very small town. It is not New York City, nowhere near close to that. It's basically like rural Canada, and not a bad thing. Just kind of boring for me, from the kind of life that I wanted to live. And I was reading this book called Ugly Americans, and it's about Stephen Lurch and the Evolution hedge fund that started out of Tokyo, and Lurch's journey as a college grad coming to Tokyo, and his experiences in that scene. I was like, wow, this was a lot of fun, way more fun than what I'm doing right now in my fucking living room. And so, like, wow, I want to move out to Asia, or I want to go do something different where, I can do something impactful at a very, very short period of time. And so I thought, well, Japan was sort of a, 80s, 90s story. What's the story now? It's China, right? Joined the WTO in 2001. And so that I decided that I was going to study Chinese and move to China.
Amazing. And I did that. So even then, that was a macro play. Your micro play started from early on. That's awesome.
Yeah.
And then tell us a little bit about the perps. Like, what was the inspiration for that? How did that actually come about?
So back in 2016 in May, there was, I think, 3 or 4 of us at BitMEX, and at least the 3 co-founders. We all answered every single support ticket ourselves. And so it was a big motivation to create processes and technology that reduced the time that we spent answering support tickets. And one of the most common support tickets that we would get was from customers who didn't fully understand what a futures contract was. They thought, hey, why does the futures contract expire? Why does the futures contract price differ from the spot price? Is there something wrong with BitMEX? Because they're coming from a margin trading perspective.
Right.
They understand borrowing something, trading on leverage, but they're on the spot book. And so we thought to ourselves, well, we're getting all the same question. Is there a product that we can develop that would eliminate these questions, where it looks like trading spot, but it's highly leveraged? And so we can eliminate this futures contract expiry. We can eliminate all the different expiries we had. I think we had like 4 or 5 different expiries. None of them had a lot of liquidity. We were splitting liquidity across a bunch of different contracts. So let's create one product that solves these problems and reduces our workload. And so that was a genesis of the three of us tinkering around of like what we're going to do. And if any of you who were trading this back in the day when we initially launched it, people hated it. They didn't like it. They said, OK Coin has these futures contracts. Why don't you guys go back to that? The Chinese have done it well. Why are you guys trying to change things? We don't like this swap thing. What does funding mean? Like, we don't understand it. And, there was a big internal debate. There were some people for and against keeping the swap. I was very adamant that we need to keep this product. It's solving the problem that we initially set out to solve. Let's just keep trucking forward and making tweaks to it to get it to behave the way we want to in the markets. And, over the next 12 to 18 months, it sort of proved itself as a good decision that we stuck with this product because it became, the largest trading product ever.
It's amazing. Thanks for sharing. It has been, and then I don't know if you know this, but VALR recently launched Perpetuals ourselves. So this is now a few months ago that we launched Perpetuals. And so in many ways, thanks to you, because you guys
Awesome.
So awesome. All right. So zooming out a little bit, you and I have had, I remember I shared a paper with you back, I think it was 2016, The Advent of Crypto Banking. I had just written it, shared it to you, and we had a couple of conversations really about macro perspectives, our views on the world, etc. And I didn't know actually that you were a little bit of a gold bug before you entered into crypto. So one of the questions that I wanted to ask, and I'll share kind of my views as well, but when you think about the world, you think about the economy, like, are there certain particular frameworks you use to understand it, to decipher it? There's so many different factors to consider. So how do you distill the information? That's the first question. Then the second question that's related is, where do you get your information from? Like, are there particular, thought leaders or historical narratives that you read? But let's start with the first question, which is kind of, what are the frameworks that you use to make sense of the world, economically or not?
So being that I'm predominantly a crypto investor, and I believe that it wasn't a coincidence that the Bitcoin white paper was published after the global financial crisis in 2008. Genesis block was in early 2009. I think a large part of what Bitcoin is a reaction to essentially the last gasp of the petrodollar system, which was 2008. So people who think that de-dollarization started 2022, 2023, that's erroneous. It started in 2008 when the U.S. government decided, okay, we're not going to take any pain ourselves. We're just going to print a bunch of money and export that pain around the world to everyone else who must use our dollar. And as a result, we get Bitcoin. We get sort of the rise of gold holdings by an emerging market, the BRICS countries and China and whatnot. And it's the breakdown of this system that's been in place since Nixon removed the U.S. dollar from gold in 1971. And sort of the petrodollar bargain was given to Saudi Arabia, which is, price your thing in oil, by price oil in dollars, invest your surplus in treasuries. We'll give you military backing to make sure that the locals don't rise up against you. And so that is the, global architecture that we've been under since the 70s. In the 90s, we get sort of the rise of China and what they've done to the world in terms of becoming the manufacturing hub of the world, and how that has sort of changed global relations. And if I try to think of like one chart that I think is the most important chart that people should understand, and it's I think the IMF publishes it and it's the net international investment position of all the major economies, positive and negative, right? So if you have a positive number, that means you've owned assets, you own claims on the rest of the world. If it's a negative, then you're the one who has those claims hoisted on you.
And this is basically differences between imports and exports across the world, effectively, right?
Basically, yeah. So if I earn more from exporting than importing, I have a surplus, and this is a calculation of what is that surplus cumulatively right now. So if you look at the chart on the left side, the people who have assets, you essentially have Japan, China, and Germany. On the right side, the people who owe all the money, it's the United States. And that is the system.
By a huge margin.
Yeah. So it's something like $3 or $4 trillion plus minus between the four major things. So that's kind of my overarching thesis, which is this is an imbalanced system. It doesn't work for everyone. It has to change. I don't know what the change is, but I know it's going to change. And the people who run all these global systems, regardless of what the philosophical ism that they pretend that they adhere to, at the end of the day, their medicine to stay in power is to print money in various forms. Call it quantitative easing, whatever the euphemism is of the day. And it's to keep that chart the way it is, and so Bitcoin is the antidote, which is, hey, that's going to change. All this printed money, I'm going to take some of that and rise the fastest ever of any asset in history. And that's kind of how I look at the world. And I boil it down to all I care about is the quantity of money. I less so care about the price. And I'm just watching these countries try to keep this system afloat, obviously mostly led by the United States as the biggest beneficiaries of the current architecture. But you do have the other people who've bought into this who are trying to maintain how things have been for the last 20 to 30 years.
Absolutely. Thanks for sharing. Then this has brought a lot of questions, and I'm going to talk about your essay Mayday that you just published a couple of days ago. But just to wrap up on my second part of the question, are there any particular leaders, thoughts, like you've mentioned in the past, there have been a few kind of authors that you highly respect. So I think it would be great for the audience to hear some of those.
Yeah. So unfortunately, a lot of these people, and I think they should charge for their work. They charge a lot of money for the subscriptions. So I probably spend a few $100,000 a year just on research subscriptions of people that I like. And we have so much information in the world.
Yeah.
Now we pay people to curate it for us. So these are my curators, and I like their viewpoint. Sometimes they don't agree with me, but I think that they think things through in a very concerted and logical manner. So Felix Zuloff, he has a subscription that he publishes. Grant Williams, Jim Bianco, Russell Napier, who else? GavCall Research. Those guys are very good. Ned Davis Research, BCA Research. Those off the top of my head. Perfect. Those are some that come to mind.
That's awesome. I think that's great. People can look into them and look them up and listen to some of their interviews, etc. So moving on to like the macro picture, you and I have had some conversations about the fate of the U.S. dollar, where the world is going, etc. You've been talking about making some calls about Bitcoin at $1 million, and one of the things that I believe is that Bitcoin will outlast the US dollar, right? I think the US dollar will not be here forever. And I think by virtue of it Bitcoin outlasting the US dollar, by definition, we'll have to go through $1 million per Bitcoin, ultimately where the price of Bitcoin per US dollar will be infinity, because I think that at some point in the future, the dollar won't be worth the paper it's printed on, right? Physically. Now, I don't know how long that's going to take, and we know about the history of failed fiat currencies. There have been some fiat currencies and some central banks that have been around for a long time. As we know, the Fed is only just over 100 years old, since 1913, but some of the other central banks date back to like 1600s and 1700s, right? But still, this is not like huge old institutions, This is not from 2,000 years old or whatever it is. So that scenario where the US dollar doesn't exist is something that I've thought a lot about. And actually, I remember when I was at Berkeley in 2000, in one of my classes, I asked one of the economics professor, what happens if the US dollar doesn't exist? And everybody unilaterally thought I was absolutely out of my mind, because like that's never going to happen. And I think more and more we're starting to see the cracks in the US like reserve currency system. So I want to hear your thoughts about, do you think that you share that view that the US dollar won't exist in the future at some point? I think that there's actually a good chance that might happen in my own lifetime. Let's see. And by the way, I don't think that's a great thing to celebrate. I don't think if you have crypto, if and when the US dollar fails, that the people with crypto are going to be, saved and others are not. I think it's going to be a really bad situation for the world, and there'll be a lot of suffering across the board. So A, do you agree with that? And then B, why or why not? And then we'll kind of go into a little bit of the intricacies based on your Mayday essay as well.
So I think the only situation where the US dollar doesn't exist is the imaginary belief of the thing called America, which is a bunch of squiggly lines on a map, doesn't exist anymore. And
okay,
I don't think that's going to happen, mostly because the squiggly lines on the map have two oceans, and North and South have two very pliant allies, Canada and Mexico. So I think it's very unlikely that the United States is, number one, invaded from either ocean or ground. Of course, there could be a hypersonic missile and nuclear strike. Yeah, that's definitely on the table, given the way things are going. But I think the U.S. has a lot of potable water. They have lots of open land. They have food. And they have energy. I think it's number 2 or number 3 biggest energy exporter in the world. So from a, base level of stuff perspective, the US is sound. I don't think it's going anywhere. But the political system is, who knows? But I don't think a domestic country is going to give up the right to mint their own currency. Now, maybe the Bitcoin revolution takes hold and we're able to fully divorce money from governments. I hope that happens. It's going to take a long time if it does happen. I really don't think that whether or not the US dollar exists, it's kind of a question that doesn't really matter. It's more about like, where is a US dollar used? And if I'm in the United States and I want to trade with somebody in China, and these two countries break down their political and economic relations, how do I move capital between these two spheres? Is the terminal value of an asset from an American's perspective in China 0? Is the terminal value of an asset from a Chinese perspective of an asset in America 0? How can I move between the two spheres? That's where I think Bitcoin and digital currencies play a role. I don't think that domestic currencies in strong nation states who have food, water, and space are going to go away anytime soon.
So a little bit of a challenge to that, or kind of another perspective to get your thoughts there. So I agree militarily, and kind of like, as you said, the natural resources, the energy, etc., is there. Obviously, VALR is based in South Africa. We're very close to Zimbabwe, and actually not much changed about Zimbabwe, right? In like the other early 2000s, from a perspective of natural resources and talent that was existed in the population, etc. But what did exist was, or what did change was kind of the powers that were at that time, Robert Mugabe, who said, listen, let's put on the printing presses and let's get some of those Zimbabwean dollars to be printed. And obviously there was stuff where they stopped the farmers from farming and they kicked a lot of people out of the country. But I think like one of the big things is that they didn't understand fully the idea of scarcity of their own currency, right? And then they put that top on too much. People started realizing, we don't want this stuff. It's not worth what it purports to be. And then the populace revolted against the currency, right? And even at that time, the population revolts against the currency. The government itself won't even accept it as a tax payment because it's not worth anything, right? So the question that I ask for myself is that more and more people are starting to understand kind of that fiat currencies, the US dollar is not backed by anything. 1971, as you said, decoupled from gold. And we're looking at the chart. If you look at the Federal Reserve balance sheet, it's gone up. It's coming down a little bit, but to your essay, which I want you to kind of elaborate on right now, we're starting to see the Fed pump more liquidity into the system. So I think the question for me is like, at what point does the populace say, you know what, inflation is going to become much higher. Do we want to stay holding this asset, right? Or are there other options for us? And I don't know what that looks like, but I do think that there's a decoupling, because I agree the US is not going anywhere. But I think there's a scenario where the US stays, the populace revolts against the currency and starts using a replacement. So let me get your reactions to that as well. Maybe it's neither here nor there to you. And then I want to go into a little bit of your understanding about liquidity that's coming in from the Fed based on your latest essay.
Yeah, of course, any population can revolt against their currency, and that's a function of what are the domestic, cultural, political systems, how strong they are, belief systems, all that kind of stuff. As somebody who's grown up in the United States, I can say that the propaganda about the United States is very strong. I don't know much about Zimbabwe, but I don't know of any other country in the world where people wear their flag as a fashion statement. And I use that as an anecdotal.
Just the pride. There's a lot of pride.
There's a lot of pride about what it is to be American, whether that's misplaced or not. And so I think that there is a much higher structural belief in the imaginary thing called America than there was in the imaginary thing called Zimbabwe, which was Rhodesia, which didn't exist as a country until the Brits came down and, carved some lines on a map, a few hundred years ago. So I would say that it's a lot less organic in terms of what it means to be a Zimbabwean versus what it means to be an American and people's belief system, which translates into their ability to trust the government and the currency and whatnot. So yes, there's this minority of population who believes in Bitcoin and sound money and gold and whatnot. But if you ask the average American, they think America is the greatest place in the world and the US dollar is strong. And let's go bomb those motherfuckers over in the Middle East. So I don't think that this is, I don't think that situation, yes, it's very left tail. It's something that is in my probabilistic framework of something that I'm going to trade off of.
Okay, got it. We'll have a 2.0 of this when we've got much more gray hairs in like 2-3 decades. We'll come back and we'll have a repeat of and look back at where we are. That's awesome. So let's talk a little about your essay. It was really awesome, as usual. And if people don't know, Arthur writes a killer essay with some very flowery language as well, which is very beautiful, very creative, and very, very insightful. So check out his blog. Where can they find that blog, Arthur?
Substack, Crypto Haze, Crypto Trader Digest. You'll find it.
Awesome. So tell us a little bit about kind of the liquidity that's coming to the system. There's some QT, quantitative tightening, that's coming in, and you talked a little bit about the nomenclature that's being used, and I think it's absolutely right. What is quantitative easing? What is quantitative tightening? There's a lot of kind of things that are hidden with this language. So let's hear a little bit about what you're seeing in the markets from the Fed, their recent messages, and where you see that taking us over the next couple of years.
So what people need to focus on is credit money. Credit money comes from the commercial banking system. The commercial banking system can create credit money from bank reserves. And so essentially, technically, what a central bank manages is bank reserves. So when they conduct quantitative easing, they credit the banks with base money held at the central bank, and they take bonds off of their balance sheet. So technically speaking, they do not print money. It's the commercial banking system that then can use those banking reserves as the base of loans. And so when they create loans and loan money to people, that expands the credit money supply, and that gets the economy going. So that's what the Fed and other central banks are managing, is how much or how little of bank reserves do I need to achieve the outcome that I want, which is loose or tight monetary policy. Now, we can't forecast what the optimal level of bank reserves is given the economic situation, but the Fed knows based on history that if the level of bank reserves gets too low, and too low has been rising ever since. Too low might have been $1 billion when they weren't as active in the markets, but today too low is in the trillions of dollars. And when bank reserves get too low, then something bad financially happens, whether that's the repo crisis of 2019, whether it's March 2023 when you get these banks failing. We don't know what the crisis is. The Fed knows that if I get too low on bank reserves, number one, yields start rising, which is bad because they're heavily indebted. Number two, the banking system stops functioning in a way that they want it to function. And so that's what they're really managing. Yes, they have this price of money component, which is what a lot of people focus on. And this is, a belief system. I can't really prove this. Some people are price people. Some people are quantity money people. I'm a quantity guy about the quantity of money. I think the level of bank reserves is way more important than what the Fed funds rate is. And so when the Fed says, I was taking 95 billion of reserves out of the system every month, now I'm only going to take 60 billion every month. So the rate of change has reduced by 35 billion. So at a forward-looking market, I have actually eased monetary conditions because the rate at which bank reserves were falling has now declined. And so I believe that this is a stealth form of easing because they can't cut the rates right now because it's politically toxic when you have, reported inflation and 3% or whatever it is. The voters are hip to that. Oh, you're printing money. Now, obviously we think that everybody's on Instagram popping bottles and going to the club all the time, but there's real misery in the United States for people who are losing their job, who are underpaid versus the real inflation rate, which is probably closer to 10, 15% versus the 3% of what you're seeing on these manipulated statistics. And that's why Biden's approval ratings are in the toilet. As much as he wants the Fed to cut rates, he knows that he's got an inflation problem with his base electorate. And if inflation accelerates going into the election, especially in the oil front, then he's going to lose. And so that's why the Fed can't cut. But the Fed needs to ease because the U.S. government makes a lot of money on capital gains taxes from the stock market. And so it's Yellen and and Jerome Powell's job to ease without easing, where the general population thinks that they're fighting inflation and doing what they need to do for the little guy, but they need to make sure that the rich people keep their stock gains so they pay the taxes. And so that's what this whole game is about. And they're trying to, find their way across the river by feeling the stones in a very surreptitious and dishonest manner. But that's what they're trying to do.
So that paints a pretty pessimistic picture about the intention of like Janet Yellen and kind of the people in power. So a question is, when I think, and let's bring in Republic First, that also failed recently, right? And the fact is the fourth bank that's failed in since last spring, right? And there hasn't really been any pain that's been incurred by the economy because the FDIC is insuring deposits below 250,000, but there hasn't been any depositor of any of the four banks that have failed that has taken any loss, right? And to your point, I think you said that there's something like 6.7 trillion US dollars that is effectively stealth liquidity into the system over time, because that's the value of US depositors that is not insured over the FDIC limit. So I agree that there is. So let me put it this way. I think, and you said it very nicely in the essay, the authorities can't let a little bank go belly up because there are over 4,000 banks in the US. If they do it for one, everybody knows they're going to do it for the rest. And then there's going to be a flight to the too big to fail institutions. But is that not just like, that's the reality? Is there a bad intent that you feel like there's kind of like, I suppose when I think about Janet Yellen and others, I think they're probably trying their best to try to, with the tools that they have, calibrate. Do you think that it's a little bit more pessimistic than that? Or is it like, what are your views on kind of the intentions of the power?
They're politicians doing their job. The number one job is to maintain the status quo of the system, right? So for the status quo, if you're in the top, 1% of income earners in the US, the status quo is fucking amazing, right? Yeah. It's a great place. Yeah. For the rest of the people, maybe below 10%,
not so good.
They might have a debatable opinion about whether or not the status quo is something they want to continue. Right. And so that's what their job is. So depending on where you fall in that income distribution is whether you think they're doing a great job or you think that there should be some sort of revolution and they should change the whole way of the architecture of the system.
Gotcha.
But at the end of the day, as somebody who's agnostic to what the outcome is and no way of knowing what it will be, we do know that in a bid to, number one, get reelected, the Democrats and Joe Biden to get reelected, and all the different government agencies that report into his people, who are staffed by his people, whether it's him directly or Obama's or Clintonites, they want to maintain a particular political party in power and a particular political system, and therefore they will do what they need to do, which is print money in a way that keeps them getting reelected. Because as they keep printing money, the base level of knowledge of the population grows as to the ways in which they're getting fucked, and they start, reacting poorly. Now, can they go bail out any more banks? No, that was received very politically poorly. Why are you bailing out these banks yet again after 2008? Why did I lose my house, but Bakers paid our record bonuses in 2009? That doesn't fly anymore. So we have to change the words. We have to change the way we're doing things to achieve the same outcome. And so with people looking for the Fed to cut rates to zero, that's not going to happen. But they're going to do it in another way. So don't sit out of the market because they're not doing the thing they did in 2008. Adapt your thinking. Think a little bit creatively. If you imagine if you were in their position, what would you do if you were a politician and you knew you couldn't do it like you did in the past, but you need to do the same thing in the future? And that's kind of how I like to think about things. Is I put myself in Janet Yellen's shoes. I need to get my boss reelected. Here's the toolkit that I have available to me. What can I do?
So WWJD, what would Janet do?
Yeah. And forget about Jay. Jay doesn't matter anymore. It's all about Janet. She's more powerful than Jay.
Absolutely. Awesome. Let's talk a little bit about going forward as well, and talk a bit about the US dollar, as you said, the reserve currency of the world right now. You said you don't think it's going to necessarily disappear anytime soon, etc. One of the things that's happening globally over the last, I think, particularly since the advent of the internet, I think it's like the crumbling of the institution of the nation state, right? We've got communications that are going across the world. It really doesn't matter where you are. We're becoming a much closer world, right? Thanks to communication. You're on the other side of the world from where I am right now. So I think the decoupling of money and state is going to be happening, regardless. And I think, at least my view is, the next reserve currency of the world, whatever it may be, I don't think it will be linked to a nation state. I think it will be something, I don't know if it's going to be Bitcoin or anything else, but I do have a feeling that it's going to be something based on cryptography, because it's such a powerful concept, right? So I wanted to get your thoughts a little bit about, kind of far into the future now, kind of long-term thinking, is of what's going on. A lot of people are talking about the renminbi, maybe, might be the next reserve currency, etc. What are your thoughts about that? And even if the US dollar stays, but isn't the reserve currency, how do you see that play out? Is it another country currency? Is it a crypto? Is it, is all the discourse about Bitcoin being the next reserve currency just noise and wishes of the crypto community? What are your thoughts?
So I think that the world is going to split into 3 economic blocks, and they'll each have their own distinct currency. But global trade on the sovereign level, my base case is it will be gold, that it'll be used to settle balance of payments. Wow, amazing case. On the retail level, it will be crypto, Bitcoin. On the sovereign level, maybe they use some sort of crypto-based currency. I don't think so. I think they'll fall back to gold. But the 3 blocks, the West, the US, Western Europe, Japan, South Korea, Australia, the Eurasian bloc, China, Russia, Iran, and then the non-aligned, so the Brazils, the Indias, South Africas, Indonesias. And the non-aligned will move between, either block depending on military pressure or economic pressure. But they're going to try to go their own way. And then the question is, how do we do global trade? We'll go back to how we did it before, which was, hey, if I can't find something I actually want, you got gold, I've got bauxite, we can swap, or here, I have some extra gold, here you go. Here's what sovereign nations understand gold. Central banks understand gold. They've all got it. We've had thousands of years of history using it. Are they going to go to crypto? Maybe. I don't think so, just because they have the architecture already to move gold between themselves. They don't have to imagine a new way of doing things. Just go back to what we did 40 fucking years ago, right? It's not even that far back in history that this is what we did. On the retail level, I believe that individual investors and people moving gold around is impractical. However, Bitcoin is practical. I can trade Bitcoin for dollars. I can trade Bitcoin for RMB. I can trade Bitcoin for Real. And so if I'm not able to trade directly because the blocks have blocked themselves off from the others, I can use Bitcoin and other decentralized crypto money to move assets around the world and interact with each distinct block. So I don't think there's going to be a reserve currency. I think there will be reserve currencies within the blocks. And then on a sovereign level, we settle in gold. On a retail level, we settle in Bitcoin.
So on the sovereign level, like you literally view like gold on ships going between like these different blocks, or because obviously we know like the French and the US, that's one of the reasons also that gold kind of failed, that people was trying to claim their gold that was in the US and that wasn't kind of like kosher.
Well, right now, no one trusts the U.S. anymore. That's why people are repatriating their gold from the Fed. Maybe they'll trust the people in the Eurasian bloc will trust China and they'll keep their gold in the Shanghai Futures Exchange vaults. I don't know. Or there'll be some trust among particular countries where they don't need to actually move the physical gold. But at the end of the day, we've done this before. We know how to do it. It's not that hard. It's expensive, but it's within our ideological framework. If you're a bureaucrat, you don't try to do new things, do the old things a little bit better.
Got it. And so you also geopolitically, kind of that view of the three blocks in the world, you view like the tensions between the West and the East right now are going to deepen tremendously, or like what are you seeing on the horizon geopolitically?
More proxy wars, more Israel, Hamas, more Ukraine, Russia. I don't think there's going to be a direct kinetic conflict between two nuclear powered states. I hope not. I mean, the history is very clear, right? The United States has never attacked another country with a nuke, period. As bad as Kim Jong-un and the North Koreans are, no way that they're attacking another nuclear power. So that's why people get nukes, because if you don't have them, you become Saddam or Gaddafi. And so I think that's the world splits along those sorts of lines.
I hope you're
right. And I hope we don't have, nukes flying between Moscow and New York, but obviously it could happen.
I am worried about some of the leadership that we're getting across the world. I think like political leaders globally are not what the best society has is to offer, right? So I hope you're right there. I think I have a little bit more of I have a long-term optimistic view of the world, short-term pessimistic. I think things are going to have to get much worse. So I see like actually the issues that we see with the West and the East deepening tremendously. I wouldn't be surprised that there's going to be some major conflagration, World War III type of a thing, that will really reset the equilibrium of the world. Don't know what that looks like. I think it will be. It's horrible to think about, but I think there's not just a non-zero probability. I think a decent probability of that happening. But that's very interesting. So East, West, and kind of the non-allied, and so for the we've got a lot of our customers in South Africa. So for that block over there, do you think that they would also like kind of create their own currency, regional currencies? We've obviously heard talks about BRICS creating its own currency. Your thoughts on that?
I think they'll use gold at the end of the day,
also
right?
Gold.
Or it'll be bilateral. Or I mean, I think in Africa there's a customs union that you guys are trying to form, right, where goods and capital move freely. Maybe they'll create their own currency like that. So I think it'll be a lot more fluid. There won't be sort of the dollar and then like a little bit spattering of other currencies. It'll be more like things were in the past. We had all these different national currencies and you kind of had to figure out what they were worth.
Awesome. Okay. We'll see. You're actually a gold bug in crypto disguise, it sounds like.
I like gold for the particular trade is I want to own the thing that the central banks want to own. That's gold. And it's going to be, revalued higher against fiat currencies. That's why I own gold. And I own crypto because I think that's the money of the people.
Okay, so gold is still in your portfolio?
Absolutely. Okay. Physically. I don't touch those fucking derivatives. Okay. Only physical.
Okay. And chances of central banks buying Bitcoin to put on balance sheet?
I think it's already happening. I'm sure that there. I mean, El Salvador.
Yeah, of
right?
course, I
There
saw
you
there's
go.
El Salvador, and although I don't know if that's necessarily the central bank, right? That's a nation
I'm not
state
sure.
that's buying it. But okay, yeah, I think that Bitcoin on central bank's balance sheet is not too far off, but I think it will take some big changes that we'll see. We'll see. All right. One of the things I wanted to ask you is what question have you never been asked on a podcast that you should have been asked for your listeners that would be very interested in it? And what's your response to that?
I think maybe I've been asked directly, but I kind of say it all the time is, what should I be selling crypto that's not fiat into that's not fiat? And then my answer is energy, whatever that means in your context, right?
So take a step back because you talk a lot about this, right? So, and this is, I think, again, one of your views on the world and how you measure kind of like value and stuff. Take us a little bit of step back before like selling crypto into energy. Talk about how you view the world as energy and kind of that framework that you've alluded to in the past.
So everything that we do is a derivative of energy, whether it's, and obviously it's all comes from the sun, right? Even with oil, right, which is decomposed organic matter that's been pressurized into these hydrocarbons. So our entire existence is predicated on taking the potential energy of the sun and turning it into stuff that we like. Number one, keeping a temperate environment, right? We exist, 37 or 38 degrees C, and we get too hot, we sweat. We get too cold, we shiver. We try to keep our environment in a particular temperate zone. Now, obviously, we don't all live in a place that's that temperature, so we spend a lot of energy just on heating and cooling, right? Very, very simple. Then we need to feed ourselves, right? It's costing me energy. There is a cost to me being on this podcast, and I'm breathing, I'm burning calories. I'm gonna have to replace those calories with food. Where does the food come from? We grow it out of the ground, from the sun. We use tractors to move things to and fro. We ship food. So everything we do is a derivative of how much energy that we consume. And we can see that in the charts, right? And a person in the United States consumes, I think, per capita, like 4 or 5 times the global average of energy. Probably why everyone's so fat in the US, right? And obviously, jokes aside, people around the world say, I want to have the life that I see in the Hollywood movies. I want to have the air-conditioned apartment and the nice car and the nice food and the nice vacations and all those types of things. I want to have the Hollywood movie life that I see. Please, government, give me more per capita energy. And that's essentially what we're doing. And so if you think about what this money thing that you have is, it allows us to move physically and temporally from producer to consumer of energy. I can store my energy or my work in $1, a rand, a Bitcoin, a bar of gold. And then in the future, when I need it to buy a sandwich, I can exchange that for energy. And that's the whole purpose of money. That's all it is. It's just a store of energy. And so if we think about it that way, why do you value Bitcoin in fiat terms? I know because the US dollar is the reserve currency, but at the end of the day, fiat's just another derivative of energy as well. What I really care about is how many barrels of oil can my Bitcoin purchase? How many gigawatts of energy does this Bitcoin represent that keeps my house cool or house warm? And so if we think about it that way, then it becomes, okay, $1 million of Bitcoin, but so what? What if an oil barrel of oil is $1 million? Have I really done anything here? Have I really outperformed anything? Or have I just been, wasting my time here? So yes, if Bitcoin gets to $1 million, that's great. But I want it to be worth so many more barrels of oil. Therefore, it's overvalued in energy terms. And at some point, I need to move Bitcoin or Ethereum or whatever crypto asset that I hold, not into fiat, but into primary energy. Now, depending on how much money you have, right? If you have a lot of Bitcoin, maybe you could buy a power plant. If you don't have that much, maybe I could buy a share of a very multinational oil and gas or hydrocarbon or nuclear stock. And I can maintain my energy purchasing power that way. It depends on where you are and sort of the amount of wealth that you have. But at the end of the day, if we do get to this $1 million Bitcoin or whatever it's worth in fiat terms at the absurd level, maybe it's also absurd in terms of what it's worth in primary energy. Therefore, I should be not selling into a fiat currency that is still depreciating versus energy, but into some form of the primary energy that I need to live the life that I want to live.
And how do you measure? Is the oil price kind of your proxy for the price of energy when you're looking at that calculation?
Yeah, I mean, we're a hydrocarbon world right now, so I think a barrel of oil is probably the easiest way to measure how much energy you own.
Okay, awesome. We're going to be wrapping up in a few minutes, but I wanted to just share a little bit about your learning. So you obviously, I'm running a crypto exchange right now. I've been doing it for 6 years. You ran BitMEX for how long did you run it for?
It was
Like
7 years, whatever it was. Yeah, 7 years maybe.
6-7 years. Yeah. So kind of what are some of the learnings that you can share with listeners just about life so far, your economic journey? We've shared a lot of our learnings there, but any kind of advice, thoughts, learnings that you've had from your journey that you want to impart upon others?
Yes, I get asked this a lot by, when I'm speaking to founders or whatnot, like, what's the most important thing that you've learned? I'd probably say that good hiring policies. Bad hires are destructive way more than the money that you have to replace them, just in terms of the organization. And so I think probably one of the biggest mistakes that I made as a CEO of BitMEX is not focusing enough on rigorous hiring policies. And that means, yes, you have a role that needs to get filled yesterday. There's a lot of work to be done. Don't make compromises on the person that you're going to hire just because you need to get them in the seat yesterday. It'll bite you in the ass. That's probably the number one thing that I would say I've learned as a CEO of a company.
Great advice. I would second that as well. And then maybe the second thing is when you do hire people or you partner with people, the idea of trust. And I wanted to ask you actually about that. Earlier, you said that you didn't know your previous co-founders beforehand. So obviously running a crypto exchange, you need to be able to trust the people that you're working with, particularly your co-founders. So how did you think about trust, particularly with your co-founders?
I think I just got lucky. I mean, thankfully, we disagree on a lot of things, but at the end of the day, we agree that we want to run, and we have run an honest platform, that we're not going to steal people's money, and that if we ever get into a situation where we can't abide by those tenets, then we'll shut the business down. And I think when you go from there, then all the other things that we might disagree with each other about kind of are irrelevant, but you have to make sure that people get their Bitcoin back at the end of the day, and you do everything in your power to make that happen.
Awesome. I think it's a fantastic way to end. We have the same philosophy at VALR. Arthur, it's wonderful to have you. Really nice catching up again. We might have you back on the show in the not in 2-3 decades, but again sooner than that. But thanks for your time, and we'll chat soon.
Awesome. Thank you.
Thank you. Take care.